There's a massive, and I mean massive, shift happening in technology right now. It's a gold rush. But what if you didn't have to go digging for the gold? What if you could just own the land it's all being built on? That's what we're going to break down today, how you can become a landlord to the biggest names in AI and start collecting your share of the rent.
Just look at that number, $500 billion. That's how much money is projected to be spent on AI infrastructure in 2026 alone. I mean, to put that in perspective, that's bigger than the entire economy of some countries. We are talking about an unbelievable spending spree from companies like Amazon, Meta, and Microsoft. The scale is just hard to wrap your head around.
So here's the thing. That huge number isn't just for the tech giants. It's actually an opportunity for you. I mean, really, what if a little piece of that massive investment could flow directly into your bank account as passive income month after month? Well, it can, and that's exactly what we're going to talk about.
To understand how this all works, we have to ask a really simple question. Where does all this AI stuff actually live? You know, it's not just floating around in the cloud. It has a physical home, a real address, and that address is the key to everything.
Think about it. Every single one of those powerful AI chips, every server, all the networking gear, it all has to be housed somewhere safe and secure. We're talking about these enormous, power-hungry buildings filled with endless rows of blinking servers. The AI boom isn't just about code and algorithms. It's just as much about real estate.
And this is where it gets really interesting. Let me introduce you to the AI landlords. They're called data center REITs. A REIT, that's R-E-I-T, is a real estate investment trust. Basically, it's a company that owns and operates these giant digital fortresses. When you invest in one, it's like buying a tiny little slice of a huge commercial property. But instead of offices, it's filled with the brains of the internet. They build the homes, and then they rent them out.
So who's renting these places? Oh, just a few small startups you might have heard of. We're talking Amazon, Microsoft, Google, Meta, literally the biggest, most powerful tech companies on the entire planet. These are the companies cutting the rent checks to the data center REITs, which makes them pretty much the most reliable tenants you could ever dream of having.
Now here's what's so cool. The two biggest players in this space, Digital Realty and Equinix, they actually dominate different parts of the AI world. Digital Realty focuses on these giant campuses for AI training. That's where the AI models learn and get smart by crunching massive amounts of data. Equinix, on the other hand, they're all about the global hubs for AI inference. That's the other side of the coin, where the trained AI makes those split-second decisions for you in real time. And look at that uptime, 5 nines. That's absolutely critical for their clients.
Okay, so we know who the landlords are and we know who's paying the rent. The next obvious question is, how do you get in on this? How do you start collecting your share of the profits?
This chart just lays it out perfectly. I mean, think about being a traditional landlord. You're dealing with tenants, toilets, and late-night calls about a leaking roof. It's a ton of work. Investing in a REIT is the complete opposite. You have professional management handling everything. You never have to talk to Amazon about their server racks. You just collect the checks. It is truly passive income. All right, so the idea sounds pretty good, right? But how do you actually pick the right company to invest your hard-earned money in? Well, this is your playbook, a super simple step-by-step guide to check out these potential income streams. It all comes down to these 3 simple checks. We're going to look at their past performance, we're going to look at how much they pay out, and we're going to see if they've earned this special title that signals incredible reliability. It's kind of like checking someone's resume before you hire them for the most important job there is, growing your money.
First up, history. You absolutely want to look at a company's track record. Have they been paying out consistently? Even better, have they been increasing their payments over time? A long history of reliable dividend payments is one of the strongest signs you can find of a company's financial health and its dedication to rewarding its shareholders.
But, history can also be a warning. For years and years, AT&T was a favorite for income investors. And you can see why. They had this long, beautiful history of steady increases. People literally built their entire retirement plans around this stock. It looked like a total sure thing. And then this happened. In 2022, they slashed the dividend almost in half. This is exactly why a long history of uninterrupted growth, especially growth that survives tough economic times, is so important. A great track record isn't just about growth, it's about being tough and resilient. Okay, step 2 is checking the dividend yield. The easiest way to think about yield is like the interest rate you're earning on your investment, paid out to you in cash. Now, you might see some huge double-digit yield and think, wow, but that can actually be a big red flag. Often, the sweet spot for reliable, sustainable income is right there in that 4 to 6% range.
And that brings us to the final step, step 3. This right here is the gold standard for reliability. It's what separates the pretty good companies from the truly great ones.
A dividend aristocrat is a company that has increased its dividend payment every single year for at least 25 years in a row. Think about that. Through recessions, market crashes, global chaos, they just kept paying their shareholders more. Now, our AI landlords like Equinix, they aren't quite old enough to be official aristocrats yet, but they're on that path. Equinix has raised its dividend for over a decade straight. These are the kinds of boring, reliable, income-generating machines you want to find.
So now you've got the playbook. But the real power here isn't about getting one single dividend payment. It's about a long-term mindset. It's about building your financial future one brick at a time. Because the real magic, the secret sauce, is compounding. See, most brokerage accounts will let you turn on something called a DRIP, a dividend reinvestment plan. It just automatically uses your dividend payments to buy more shares of the company. And those new shares, well, they earn their own dividends, which then buy even more shares. It creates this incredible wealth-building snowball that just gets bigger and bigger over time. Now, I know what some of you are probably thinking. It's too late for me, or I just feel so far behind. But that's just noise. That's not real. The most important thing you can possibly do is just start. As the financial educator Ashley M. Fox says, you have to lay the first brick.
So here's the key takeaway. Focus on the gain, not the gap. Don't worry about where you think you should be. Celebrate that very first dividend payment, even if it's only 30 cents, even if it's just enough to buy a coffee, because that's the foundation. That first tiny brick is how you eventually build a financial fortress that generates thousands of dollars a month in passive income.
The entire infrastructure that is going to power our world for decades to come is being built right now, as we speak. This isn't just another investment strategy. It's a chance to own a real piece of the future. So the only question left is, who's going to be there to own it and collect the rent?